Well, let's get to read from our holiday money panel, Rebecca Walser and Larry Glazer. Rebecca, everyone's like, sort of champing at the bit. The experts said this year wasn't going to be too great. It turned out to be phenomenal. So maybe a repeat next year?
Oh, I wish, Charles. And Merry Christmas. Thanks for having me. Charles, obviously, I'm preliminarily a bear right now, just because the fundamentals globally, macroeconomically, are their problem. And so I am expecting some issues, some real solid fundamental issues with the Fed. And, just for example, them saying that we're going to have a 3-rate cut and the market already pricing in 6. The market is just so pushing the Fed to do more than they're saying they're going to do. And I think that we're going to see that, there are still some sticky inflation numbers. And I think that's going to give Powell a little bit of a hard time, especially if the market is really pushing for a March cut and Europe isn't even going to get, like the UK won't even get the BOE, won't even get the CPI print until April. So right. I don't think Europe's going to do anything until then. And it's really going to put Powell in a difficult situation. Yeah, I agree. Powell is, Larry, that Powell maybe has been boxed in a little bit, maybe the tail wagging and dog Wall Street pushing Powell. And also, isn't it sort of ironic that the market is going up in part because the economy is slowing and maybe even going toward a recession?
Charles, that really is a good point. And as Wall Street gets ready to pop the champagne corks on a better than expected year well done, before we can say where we're going next year, we have to remember where we came from. And it was this time last year, it was all doom and gloom and pessimism ruled the day and soaring inflation and imminent recession. And what a difference a year makes. Today, that pessimism has been replaced by optimism, rose-colored glasses. Everything seems great. Jay Powell is going to steer us towards that soft landing, and we're going to have a Goldilocks economy, not too hot, not too cold. That remains to be seen. But Charles, what we do know is that it's never been a better case of don't fight the Fed. In this case, the Fed gave us these really high short-term yields. Investors jumped at the highest yields in 20 years. But the Fed giveth, the Fed taketh away. The Fed's talking about 3 to 4 rate cuts, 5 to 6. If you listen to Wall Street, that could push $6 trillion worth of cash into the financial markets or someplace looking for a home, as it's no longer rewarded in cash. Right. So we know lots of risks on the horizon. Expectations are very high. Volatility is very low. And it's going to be a really interesting year. Yeah, and folks, again, Larry's talking about all those money in money market funds. When those rates come down, that money comes out. It does look for a new home. No doubt. And Rebecca, what do you make of that? I mean, it's because the stock market is not the economy. And, the economy could be going down the tubes and the stock market could be going higher, which always confuses Main Street. Well, I 100% agree. And the stock market is a reflection, especially this year. Look at the Mag 7, Charles, of the S&P 500. It's 28% of the S&P 500. And if you look at the small cap, the micro cap, you'll see negative returns and very 2% returns. So the 23% that we're seeing at the S&P is really the Mag 7 that is almost 100% return on average this year, pulling up the weight of the rest of the market. So it is really a bifurcated world of the real economy and the stock market, and it is another demonstration of the Fed's policy and monetary theory really going to corporate America and the top 1% of corporations, multinational corporations in the world, and not to the little mom and pop that you just interviewed, the grocery store. That is where the engine of the economy comes from. But this money is being funneled to the Fortune 100, and that is what we're seeing, and that's the bifurcation, the difference. Well, those folks you're talking about, Rebecca, are also known as political donors. I got less than 2 minutes, about 90 seconds, Larry. How does the election play into all of this? Look, an election year, anything can happen, Charles. And you do have moderating inflation, but overall costs still remain high. And investors are concerned, but also Main Street's concerned. So as long as spending remains at the level it's at, we don't expect to see a recession. But we know when we get into next year, geopolitical risks, China, the Middle East, Russia, Ukraine, those all remain relevant. If oil prices go back up, the consumer's not going to feel so jubilant going into next year. So we'll take the good news, we'll take the optimism, we'll take the holiday cheer, but we've got to take it in moderation with a dose of reality here. But Larry, don't you see, though, the current administration is going to spend as much money as they can? I mean, we've come a long way from a chicken in every pot. You know what I mean? Look, there's no doubt, like, the interest rate cuts ahead of an election are always suspicious. And I think people see through that, and they know if their income drops, they're going to feel it. So right now, there is a concern. What does the Fed know that we don't know? If they're willing to cut rates that many times in a very strong economy, maybe they're worried about what next year looks like. So in election cycle, it's going to be a really interesting year. Stay tuned. Can't wait to see how it all plays out.
Hold on to your hats and buckle up, boys and girls. Rebecca, Larry, Merry Christmas. Thank you both very much. Appreciate it.
Me too.